Most people won't notice the biggest wealth transfer of this decade until it's already over. And by the time they finally understand what happened, the smart money will already be gone. Right now, while millions of people are distracted by headlines, politics, entertainment, and short-term market noise, something much larger is quietly happening underneath the global financial system. Something most people cannot yet see because the biggest shifts in history never begin loudly. They begin silently. And the people closest to the financial machine are already moving. Central banks are buying gold at levels we haven't seen in decades. Nations are slowly reducing dependence on traditional reserve systems. Billionaires and institutions are increasing exposure to hard assets, while the average person still believes the system around them is as permanent as gravity itself. But history says otherwise. Every major empire, every dominant currency, every financial system eventually reaches a moment where debt becomes too large, money creation becomes excessive, and confidence begins to weaken. And confidence is everything, because money only works as long as people trust it. The moment that trust begins eroding, even slowly, the entire structure underneath the system starts changing. That's why this moment matters so much. Most people still think wealth transitions happen suddenly, a stock market crash, a recession, a major economic event. But real financial transformations happen quietly at first, then all at once. That's how currencies weaken. That's how purchasing power disappears. And that's how ordinary people wake up years later, realizing the rules changed while they were distracted. Now think about this carefully. If the institutions that understand money better than anyone are aggressively accumulating gold, what does that tell you about their confidence in the future of paper currencies? Because this isn't random behavior. Governments around the world are carrying debt levels so massive that the numbers themselves barely feel real anymore. Trillions upon trillions borrowed into existence. And historically, when nations reach these extremes, they usually face only a few options. Raise taxes aggressively, cut spending dramatically, or continue printing more money to keep the system functioning. And politically, we already know which path is easiest. More printing, more liquidity, more currency creation. But every time more money enters the system without equivalent productivity behind it, something dangerous happens quietly in the background. The purchasing power of that money slowly declines. Not dramatically overnight, quietly. And that quiet erosion is exactly why people everywhere are starting to feel life becoming more expensive, even while economies claim stability. Groceries cost more, housing costs more, energy costs more. Daily life itself feels heavier financially than it did just a few years ago. And the frightening part is that most people believe inflation itself is the problem. But inflation is often only the symptom. The deeper issue is currency dilution. No currency in history has remained dominant forever. Every major reserve currency eventually faces the same cycle. Too much debt, too much leverage, too much dependence on future borrowing to sustain present comfort. And slowly, confidence begins cracking. That's why the smartest institutions in the world are repositioning now instead of waiting for headlines to confirm the danger later. Because they understand something most people don't. Paper wealth depends on confidence. Real assets depend on scarcity. And that difference changes everything during periods of uncertainty. Gold cannot be printed. It cannot be politically manufactured overnight. It has survived wars, collapses, monetary resets, and economic crises for thousands of years because people repeatedly return to what feels real when uncertainty rises. Now, this is where the story becomes much bigger than most people realize. This isn't simply about gold prices rising. This is about a global repositioning of trust. And when trust moves, money moves. Trillions of dollars move. That's why the number we're discussing matters so much. $29 trillion. Not because it sounds dramatic, but because that's the scale of potential capital rotation that could happen as confidence weakens in traditional financial systems over the next decade. Think about how enormous that really is. Pension funds, central banks, institutional investors, sovereign wealth funds, entire nations, all slowly reevaluating where they store value in an increasingly uncertain world. And these shifts don't happen emotionally, they happen strategically. The smartest money studies patterns, not headlines, because history has already shown the pattern repeatedly. When debt becomes excessive and currencies lose long-term purchasing power, hard assets begin attracting capital again. That's exactly why gold reappears during every major monetary transition throughout history. Because unlike paper assets, it carries no counterparty risk. It doesn't rely on political promises, and it doesn't depend on governments maintaining credibility forever. Now here's the part most people still fail to understand. The greatest financial opportunities almost never feel comfortable early. They usually feel unnecessary, unpopular, even irrational at first. And that's because human psychology never changes. People don't move early, they move together. Most individuals wait for social proof before making financial decisions. They wait until television experts confirm the danger. They wait until friends start discussing it. They wait until the headlines become impossible to ignore. But by the time the crowd finally feels safe acting, the opportunity is usually much smaller. That's how every major wealth shift unfolds. People ignored inflation before prices exploded. They ignored debt bubbles before systems cracked. They ignored financial instability before crises unfolded. And now many are ignoring the quiet migration toward hard assets happening directly in front of them. Why? Because human beings are wired to believe the future will resemble the recent past. If the system has worked for decades, people unconsciously assume it will continue working forever. Stability feels permanent while you're living inside it. That's why preparation always feels unnecessary before the turning point arrives. And once the turning point finally becomes obvious, emotions take over. Fear replaces logic. Panic replaces patience. And suddenly the same assets people ignored for years become the assets everyone desperately wants at once. That's the cycle. The people who act early usually appear cautious at first, then strange, then lucky, and eventually obvious. But by then, the move has already happened. Because financial markets reward anticipation, not reaction. The crowd almost always arrives late. And right now, the crowd still largely believes the existing system will continue functioning exactly the way it always has. That belief itself is what creates the opportunity. Because underneath all the distractions, politics, social media, market volatility, temporary optimism, the larger financial structure continues shifting slowly in the background. And slow changes are the hardest for people to recognize. There's no dramatic siren, no single moment forcing immediate attention, just a gradual erosion of confidence, a quiet movement of institutional capital, a slow shift toward tangible assets, and eventually, a tipping point. Now here's the real question. What if the greatest financial mistake of this decade isn't losing money, but simply failing to recognize the shift early enough? Because that's how most wealth transfers happen. Not because people are unintelligent, not because they lack opportunity, but because major transformations always appear confusing while they're unfolding. And right now, we may be living through one of those moments. The signals are everywhere once you connect them. Historic global debt, persistent inflation pressure, currency dilution, geopolitical instability, central banks accumulating gold, and institutions preparing quietly instead of publicly. Individually, these may seem manageable. Together, they tell a much larger story, a story of a financial world entering transition. And history shows that during transitions, the gap between prepared people and unprepared people widens dramatically. Because when systems change, outcomes change. The people who recognize patterns early position calmly. They think long-term. They prepare before fear becomes mainstream. Everyone else waits. They wait for certainty. They wait for permission. They wait until consequences become impossible to ignore. But certainty is expensive. By the time most people feel emotionally comfortable acting, prices are usually higher, opportunities are smaller, and fear dominates decisions. That's why timing matters more than prediction. You don't need to predict every crisis perfectly. You simply need to understand the direction the system appears to be moving. And right now, that direction is becoming harder to ignore. The world is slowly moving away from blind trust in endless money creation and toward assets viewed as real, scarce, and independent of political control. That's why this gold race matters. Not because gold magically fixes everything, but because it reflects something deeper. A global search for stability during uncertainty. And the fascinating part? Most people still haven't emotionally processed what may already be unfolding around them. They still assume the next decade will look exactly like the last one, that debt can expand forever without consequences, that currencies can continuously weaken without changing behavior, that financial confidence remains permanent. But history rarely moves in straight lines forever. Every cycle eventually reaches a turning point. The only real question is who prepares before the turning point becomes obvious to everyone else. Because once the crowd fully wakes up to the shift, the reaction phase begins very fast. And when that happens, people won't ask whether they should have paid attention earlier. They'll ask why nobody warned them sooner. If this video changed the way you see the financial world, make sure you like this video, subscribe to the channel, and stay connected, because the next decade may reward the people who recognize the shift early, long before the rest of the world finally catches up.